Good afternoon, everybody, and welcome to another edition of ChartWatch Live. I'm Capolingua, and I'm from Market Index and Livewire Markets, and it's certainly a pleasure to be with you for our third edition of this format, where basically it's pretty simple. You ask questions about your favourite ASX stocks, and I'll give you my best technical analysis reader. Hey, before we get into that, we're going to do a little bit of portfolio management, that is determining how much of our total risk potentially. General disclaimer, warning. This is all about how I manage my model. You can do it any way you want, but basically how I manage my portfolio risk based upon the Nasdaq and the S&P ASX 200. And then, of course, we'll get into the usual requests. To Max, please, because we've got lots to get through. I'm going to try and be brief in some of the introductions. We've done a lot of foundation work over the last couple of weeks, so I'll try and get to more stocks today. Let us head over to the AMI broker screen first and foremost, where I have my wonderful trend ribbons, the double greens. We love double greens, don't we? In a bull market, crawling up the screens like caterpillars. And the important thing, of course, is their direction. We want them to be green if they're going up. They might be amber or orange if they're neutral. We've got equilibrium between demand and supply. And they'll be pinks if we've got excess supply in the market or supply side control. You'll often hear me talk in these terms of who's in control of the markets. Double greens, demand side control. It means I'm looking to maintain my risk position. I'll talk about that in a second, or add risk where appropriate. Now, in terms of my current risk position, if I can see strong short and long-term uptrends, if I can also see rising price action or demand side control oriented price action, and that is higher peaks and higher troughs, the peaks typically being the bits that look like A's and the troughs being the bits that look like V's. If you've got rising peaks, you're removing supply. That's a good thing. You're taking supply to the market. If you've got rising troughs, you are reinforcing your demand. The pullbacks are shallower each time. So that's a good sign. And then the final tent peg, I call it, of my methodology is the candlesticks. If you've got more white candles than black candles, predominance of demand side candles, that's good. Downward pointing shadows are also good. Upward pointing shadows and black candles are not. That is if you want whatever it is you're looking at to continue to go up. White candles, very important because they demonstrate to me that we've got these pervasive buy orders in the market. There is cash looking to find risk, and ultimately that's what stocks are. They're a big ball of risk. You might say, oh no, Carl, my stocks, they're all blue chips, they're safe. Sorry, all of your stocks represent risk to a professional fund manager, because safety is cash, safety is government bonds, okay? Stocks are risk. So we really, as our own fund managers, behaving like the professionals, doing this dance between having risk or safety, risk or certainty, either being invested in stocks or being in cash or risk-free bonds. And there's nothing on that chart which tells me that I wouldn't be fully invested if I was trading US shares, and each benchmark obviously dictates your risk management of your respective constituent shares. Now, there is a candle there I do want to talk about, and that's last night's supply side candle, obviously black body, a couple of shadows pointing out either side, so it wasn't a completely unanimous supply side showing, but it is still relatively small within the context of those broader trends and price action and candles. It's something obviously I'm going to watch. Black candles always get my attention, but until they're confirmed by further signals of excess supply, there's really nothing I can or would want to do about it. So, that could be the top. It could be the top of this Nasdaq bull market for the rest of time. But how about that? There's nothing I can do about it because I'm a trend follower and the trends are still up. And this is the bittersweet nature of what I do, ladies and gentlemen, this idea that you could see a signal that is not good, but you still have to stick it out with the prevailing trend. And we find that more often than not, capital M, capital O, capital T, capital N, that is the right thing to do. And that's what I'm about. I'm not about following my emotions or my gut feel. I'm just about following the probabilities, because, ladies and gentlemen, if you get the probability right, you'll get the profitability right in the long run. Aussie market is still fine. We've still got rising peaks, rising troughs. We've still got those green short and long term trends, and let's say a predominance of demand side candles still. I know the last three aren't ideal, but they're pretty small compared to the I call it the motive phase, so where we're really moving, and this is a bit more of a stagnation phase. So that stagnation is far less significant than that motion, that motive, that definitive, that decisive move there from the demand side through that last run up. So I still think we're okay here. I still think we're fine on the Nasdaq. So FRP, that's another acronym. You'll see me type lots in my ChartWatch analysis on market index. Full risk position is allowable on Australia and in the US, and that means fully invested. I don't believe in having cash when the sun is shining. Make hay. And that is me. That is my methodology. You might have a different way of doing things. So, it's always your choice at the end of the day, isn't it? Let us now, we're going to change screens. And we're going to go to your request. I will kick off with an offline request just simply so I don't forget about it. And it's come from Simon. And Simon asked, could I cover details of when you would increase and decrease your risk, please? And I'll kind of do this in a more general way as we go through your case studies, because ultimately I'll say, well, this is where I'm going to increase risk and this is where I'll decrease risk, but I'll make a greater point to concentrate on that for you, Simon. And then he also mentions one thing I wanted to discuss, which is timeframes. And there's been a little bit of interest in this because I did last week, I'm pretty sure, talk about, well, if you're a longer term investor, I clarified by saying, look, I'm more of a shorter term investor because I trade on daily charts, and daily charts tend to give me signals, buy signals and signals, in line with how often I want to trade, which is, well, look, I might have a trade that lasts a day. If it doesn't go well, big black candle comes out next day and I'll have to reduce risk, or it might last a year or 2 years. I don't know, because I'm a trend follower. I'll be in it as long as the trend allows. So daily periodicity suits me. It doesn't suit everybody. I always say that you need to be able to check the market in line with your periodicity. So if you're using daily periodicity, you need to check the market every day. You need to commit to doing that. And I always say you should check it after the market's closed. And the problem with checking when the market is open, you're going to end up doing the wrong thing. The candles aren't closed anyway. You're going to say, oh, that's the best candle I've ever seen, and then the candle will change. You wish you never did it. So once the market's closed, that candle can't change. That's really important. Some people like to do less activity. They only want to check the market once a week, and that's where your weekly charts come into it. The other part of Simon's question is, do I look at lower timeframes? I think you mean lower periodicities, and that's really all it comes down to, because the periodicity determines the time frame or the duration, more specifically, of your trade. I never look at intraday charts. I've explained why. I don't like looking at the market when the market's open, because I found in the past, over many years of doing this, that when I watch my stocks when the market is open, terrible things happen. Not so much terrible things happening with the stocks, they're going to happen no matter what, but I do terrible things. I make silly mistakes because I'm caught up in the heat of the moment, jumping at shadows, when if I did that same analysis when the market was closed, there's nothing I can do about it. I might not be happy about the result that I got in the day, but there's nothing I can do about it. I literally need to sleep on it to the next day and commit to do something stupid before I do it. But generally by then, I've cooled down and I tend to follow my trading system, my trading plan more. And that leads to better results. So hopefully that answers your question, Simon. On the first bit, which is how do I get in, how do I get out? Hey, that's what today's topic is all about. And on that basis, we're going to head over to the first few requests. The first one is coming here from Arjuna, which is PLS, Pilbara Minerals. Look, one of my favourite stocks over the years, simply because it had such a fantastic run on the way up. If we go back through here, what a wonderful run it was, double greens. I know there's some transitional phases through there, but largely plenty of trading opportunities on the way up. And then it started to interact, didn't it, with my trend ribbon, my long-term trend ribbon. We don't want to see it get beneath that, because bad things tend to happen. Not always, but often, more often than not, because we can see also over here that it did break beneath there, but then it over time did get back above it. And we address those things when they occur, and we make the changes accordingly. But we don't want to get too far beneath it, as we'll see eventually, I hope, because once you start to change trends, things don't turn out so well. And I know it's not perfect, but nothing's perfect. But the bottom line is, more often than not, we tend to want to just stick with the trends. Now, I think it's instructional, showing that history, because we're at another stage where we're transitioning as well. And what we have here is what I call my turnaround setup. Okay, so there's another type of setup which would be, say, continuation setup, and that might be really at say, well, this arrow here is a good one, a good example of a continuation setup, because by that stage we've got double greens on the screen. As you can see, we've got two strong and improving uptrends. We have nice price action and we have nice candles. So this would be an example of a continuation setup, and this is, I guess, getting back to Simon's question as well about the different ways or the different types of trading setups I look at. And as soon as I see what I like to see, I'm happy to add risk. And what does that mean? Add risk? Well, it just means not have a zero position. I know I'm sounding a little bit flippant here, but I don't want to get into how much risk to add because that's not my department. But let's say hypothetically, if you were to in your past, on average, you might invest $1,000, on an investment, or $2,000 or $10,000. I don't know what it is, but whatever that is, I don't get all in at the start. Okay, so I like to get in small parcels. I like to say a maximum of a third on my first go, and then I might go another third on the next go, and another third on the next go after that. Okay, now, you might want to go smaller, you might want to go bigger, you might want to go the whole hog. That's up to you. What I've found when I used to do the whole hog is it puts a lot of pressure on your entry, and when you intend to get out in one go, it puts a lot of pressure on your exit. And that word pressure, we're getting back to what we said before about emotions. And the fact is we don't make good decisions when we're emotional. So I like to get in a parcel, and then if the stock continues to do what I like to see, I'll happily add more. And then down the track, eventually it'll start to do the wrong things with my moving averages. It'll start to throw in the wrong candles, and we'll start to reduce risk. So I might take a third off the table through here. I might take another third off the table through here, for example, and so on. So I think we're getting closer and closer to the answer to Simon's question. But we're also talking today about this idea of having different types of setups. So there's a continuation, a turnaround, and there's also an aggressive setup. I don't know if we'll get to one of those today. But this is a turnaround setup for obvious reasons, because it's kind of about what the long-term trend is doing, isn't it? The long-term trend is turning around here. But for a turnaround setup to be valid, we need to have a short-term uptrend in place. That is a must. We should be seeing rising peaks and rising troughs. That is a must. Okay. Are we seeing that on Pilbara Minerals? We are indeed. And we should also see a predominance of demand-side candles, so white candles and/or candles with downward pointing shadows outnumber those with black bodies and upward pointing shadows. And if we have those, then we have the criteria for my turnaround setup, which is exactly what I see here. And therefore, I would happily add risk. So we could say, well, we can use this idea of plus 1/3 if you like, if you're comfortable with that idea. So I can say, for example, plus 1/3 R. Let's go R for risk on that one. How's that sound? Plus 1/3 R on the current signal. But the current signal isn't necessarily the first place I would have added risk on this. I think there were opportunities to do so prior, because really on that candle there, or even that candle there, to be honest, I think we could say that there was an opportunity to add risk. So potentially, if you, and I'm quite certain on those days they were put into the ChartWatch scans list, you can go back and check. And so maybe there, and probably today is the other one. But today's a live candle. We should say that today's candle would need to close like that. I shouldn't even be doing it now. I shouldn't even be speaking to you like right now, because we're looking at live candles, which is a major no-no. So we must assume in each case that the candle does close the way it is, which is a strong demand side showing. And then in theory, you could be moving to your final third on that. So I think we've covered off pretty well on the turnaround setup. You might say, hey, Carl, why didn't you buy it on this day? That's the best day to buy. I think it touched $1 on that day. I bought Pilbara Minerals on that day. Why didn't your system pick it up? Well, you've got me on that one. And this is a major, massive flaw in my trading model, because it's a trend following model. So on that day there, what were the trends saying? The trends were unequivocally down. At that day, and you go check the ChartWatch scans, ChartWatch had at that point put Pilbara Minerals forward as a short opportunity. And I'm just checking another worksheet here, which I've just created. So Pilbara Minerals 24th of June, I can see exactly here the history of ChartWatch now. So 24th of June in 2024, it started to call it a short. Yes, here we go, back here. So it started to call it a short back here. And from that point, and you can see why, because the shorts are just the longs turned upside down. Do I have a long-term downtrend? Yes, well, the ribbons turn pink, the short terms turn pink. Do I have lower peaks and lower troughs? Yes, I do. Do I have a predominance of demand-side candles? Supply-side candles in this case? Yes, I do. So you can see why that would be the case. And then ChartWatch, this was featured, so my highest conviction, and it says here 39 times between this point and that exact point down there, 39 times featured for reducing risk or going short. And that last time there, it was probably not on that exact candle, but it would have been on this candle here, would have been probably the 39th time. Okay, so you can make no mistake at that point. All my model is doing is telling me to be short, okay? Because my model can't see the future. So if you thought, oh, Carl's got this incredible model that can tell me what's going to happen tomorrow, I'm sorry, you're going to be very disappointed. I can't do that. And even with today, it says at risk, but today could be the top of Pilbara Minerals. It may never trade higher than today. I don't know, I can't see the future, and I don't worry about it because I know that more often than not, my model turns out to do the right thing for me. But there's an aggressive setup. We won't talk about that today, but the aggressive setup certainly, well, you would have been reducing risk when you started to get higher peaks and higher troughs. Is that fair to say? So reducing risk, potentially there, that's higher peaks and higher troughs, I'm pretty sure. The short-term trend ribbon changes. The price closes above the short-term trend ribbon. All of these things we talk about in ChartWatch each day. These things should be familiar to when you're starting to reduce risk from your shorts, starting to go flat, starting to go neutral. Why? Because the trends are neutralizing. And then starting, based upon the right criteria, to go along. And that's why it's a turnaround setup, isn't it? So super interesting, I think, case study there on that one, Arjuna. But if you've got Pilbara, you'll be pleased to know that the model is starting to be more positive towards it again. Now let's go to Lovisa, which was also heavily featured. I can't see it on that list yet, but it was heavily featured through this period through here, but it hasn't been on the list for quite a while, and the problem is for Lovisa that it's changing its short-term trend, and that is without a doubt now it's changing its short-term trend. So certainly up to even this candle here, I'm very happy with proceedings, but as you can see, this black candles start to appear, which is not a problem to start off with. Okay, at this point here, if we go back a little bit, we're going to be close that down, go back here. We're going to be hunky-dory, right? Happy. Disappointed, but again, that candle, its relevance in terms of showing supply is creeping in. We note it, but it's not significant enough to do anything about it to warrant changing our risk position. That one's even more frustrating, but in my opinion, still not enough to warrant changing our risk position because, look, even if we sum these candles together, their impact is small compared to what the demand side has shown us. So it's really a common sense approach, isn't it? We're looking for where roughly do the candles, the price action, the trend start to indicate, well, we're equilibrium and then maybe we're changing. So again, we've got some issues here. And the problem with these two candles is we've got sell the rally. Okay, so now I'm talking about this candle here, right, and the one next to it. So we have got sell the rally. And how do you know we've got sell the rally? Okay, yes, we've got selling here, but this is even more sinister because it indicates that the price is trying to go back up and it's getting pushed back down. Okay, that the sell side, the supply side now is taking advantage of any strength that they see. So we want to see buy the dip activity. We don't want to see sell the rally. Going up, pushing down, going up, pushing down. That's that upward pointing shadow. That's exactly what that's telling us. Okay, that shadow is pointing to where supply is coming into the market. So we go to the next. I'm still not doing anything here. It's still insufficient. Okay, now with demand's coming back in. So I'm quite relieved I haven't done anything. I'm holding my long positions. I'm holding my entire risk position on Lovisa. Again, a little bit of sell the rally. Is it significant? Not significant. Not too fussed. Not a great candle, but not terrible either. Okay. See, my problem now is And this is where we're going from subjective of saying, well, those candles are good or they're not good, to objective, that nobody can argue that we've now made a lower peak. Okay, because now we're coming back down this side. And we know that if we call this our point of supply, and this is our point of supply, okay, we do peaks and troughs, but I like points of supply, points of demand, because that is what it was. Peak and trough, point of supply, point of demand. So this starts to peg for me this level, okay? Right now I can see supply is building, but demand so far is holding. If I start to see signs that demand is not holding, then for me that's a trigger to manage my risk. Okay, so I would, on that day there, on that exact day, think about this. I would start to say, well, if we close beneath here, hopefully we get that nomenclature, minus 1/3 risk on a close beneath that level. Okay, let's see what happens. Still okay? Didn't close beneath the level? Now we've got a problem. Okay, so I know that candle it's not a terrible candle at all. It's actually a demand side candle. It's bouncing from there. But for me, we have crossed a point of no return. So on that day, I'd be looking to take a third risk off the table. Not stressed out. I've still got, hey, if Lovisa rockets up or gets taken over tomorrow by a big American competitor at $60 a share, happy days. I've still got 2/3 of my risk. This is what I talked about before, about reducing this pressure on getting out. Because if you have to decide on that day whether you get out of all of your Lovisa, that's a very different decision. So I let the market tell me what's happening with demand, what's happening with supply, and I'll let the market really decide for me. It takes a lot of pressure off. I don't have to decide. Yeah, I'm starting to not like this. We're not seeing a strong rally off that short-term uptrend ribbon, which you can see in the past has supported the price, its cradle price. For me, that's another day there. I think that's another day to reduce risk just on a precautionary basis, and go to a third total. I don't like that candle. I don't like the fact that we tried to bounce and we look to be failing here, and we've actually got another lower peak again, another reason. So let me just write on that one, on that candle there. And you know what? Tomorrow it could rocket, and I could regret this decision, but that's okay. I'll live with myself, knowing that I followed my model. Now we're beneath the short-term trend ribbon, and the short-term trend ribbon has neutralized. Some people like to say, well, the long-term trend is still up. I'm going to hang on to my third. For me, at this particular moment where there is so much, you have to agree, there's so many things going on in that ChartWatch scans list. I'm going to just check out here and say, you know what? I had my fun. I'm going to go find something else better to do. And that's where I am right now, Arjuna, on Lovisa. And that's just me. Other people have different opinions. Some people are going to tell you, hey, it's a really great stock. It's got great fundamentals. It's got great management. They're opening new stores. And that's fine. That's a different way of doing things. I don't care about any of those things. I only care about black, white, green, pink, orange, points of demand, points of supply. And that's it. That's my universe of care. I will look at volatility. That's the red bars here. I will look at volume. That's the blue bars here. And I will look at something else called relative strength comparative, which is actually one of Simon's questions. He asked a lot of questions. And what we're doing here is we're comparing the performance of the stock in question against a benchmark index like the ASX 200. Okay, and you might find RSCs out there. It's not RSI, it's not relative strength index. Relative strength index is a different type of oscillator. It's completely useless, by the way. I don't use it for that reason. This is relative strength comparative. There's nothing in the RSI that you can't get from the price. Okay, and this concept of overbought and oversold is just silly. Maybe we'll talk about that another day. Don't get me started. But relative strength comparative, I think, is valuable in that it's an independent technical analysis tool, because we're bringing in something that's largely independent. I can't say it's completely independent. The index and the stock, there's got to be a relationship there, but largely independent from the stock price on screen, right? And what we're always trying to do as our own fund managers is to own the stronger stocks on the market and not own the weaker stocks. And when the bars are green and rising, it's saying that the stock in question is rising faster than the market, or it's outperforming the market is another way to put it. Okay, so we can see that outperformance is diminished here because the market has been staying very strong. We know that, but Lovisa's coming off. What we prefer to see is if the market's strong, the stock is strong, as a minimum. Right? Why do we want to own underperforming stocks? So it's a separate tool that I would use. And that's where we are with Lovisa. And for me, I can cap this out by saying ZRP. RP standing for risk position, you're familiar with that. Z standing for zero risk position. Again, Lovisa might be the best stock from here to the end of time. I wouldn't care. It would start to put in white candles. It would start to put in high peaks and high troughs. The trend ribbons are going to change, and I'll just get back into it because I don't care that I got out of Lovisa at a particular price. I don't hang myself up by going, oh, I got out at $40, it's now 44, I can't get back in. I know other people do that, but I don't. I don't care what the stock is. I don't care what price I traded at in history. I just care about what happens more often than not and following my plan. Let's go to PAC. How do you determine the prices closest to the ribbons for the breaks? Not sure what that means. Do you want to see the price close to the ribbons or not? I'm not sure I understand the question. Typically, the ribbons will support the price. If you can get in closer to the ribbon, that's ideal, but that doesn't mean I won't get in when the price is further away from the ribbon if I'm seeing strong candles and strong price action. Not sure if I answered the question, but I don't really understand the question. Let's go to Steve. Okay, we talked about that one before we started, Steve, so we've done that one. Rod saying hello. Hello, Rod. Let's go to Michael looking at AGE, which is Alligator Energy, little uranium stock. Let me go back to my default zoom. It's always important we go to a default zoom before we start our next analysis, so we're looking at things on a consistent basis. Okay, what have we got here? Let's start with our trends. We've got a long-term trend that is neutral. We can see the moving averages turned amber there, and that's what I love about moving averages. They're so visual, so quickly you just go pop. I can see what the trends are. I don't have to do any fine measurements, and this allows me to scan through a list really quickly because I'm looking for double greens, or I'm looking for a nice short-term uptrend and a turnaround setup. I'm only really looking for two things. I can get through a list super quick. If I was to do the analysis on every single stock on the ASX, I'd never finish. And if I was scanning down a list, I would skip over AGE instantaneously. It would be a fraction of a second spent on this, and I would move on to the next one, which you might scream bloody murder and say, hey, Carl, this is such a great company. Why did you just skip over it in a fraction of a second? I say, look, it may well be a great company, but other people don't think it is just yet. You think it's great, but I really care about what the market thinks about it. And if the market really thought this was a great company, they'd be buying the hell out of it, and they would be turning my moving averages up. They'd be creating great price action, they'd be creating great candles. It's not yet. I don't want to disrespect your stock there, Steve. Sorry, Michael. But look, it's just not one I'm interested in, and I'll tell you when I'll be interested in it. So, for a turnaround setup to be in place, actually, I forgot to mention this before. We need to get above the long-term trend ribbon. That's important. We can't be beneath it, and ideally, the long-term trend ribbon is starting to act as a zone of dynamic demand because we can see on the way down just how good this trend ribbon is. It's amazing. Look at that. Like it just killed. Like it got above there, but did it do that support? Did it come back, pull back to the long-term trend ribbon and demonstrate to us that long-term trend ribbon is behaving as an area of dynamic demand? That is a key for me. So you can see why I have that rule, because for many years I realized that trying to get in too early was not smart. Let's face it. Trying to buy stuff on the way down, you might get the occasional bargain, but more often than not, what happens? There's that phrase, more often than not. Maybe I get the bargain like Pilbara, but more often than not, what happens? Like even now, we think we're going to the races, and then the leopard didn't change its spots, did it? Or its candles. So I need to see, and this is not a great example because it took a while, not really till there, but at least we got that trough above. And sometimes even then, even then, it might not work out. But we want to see positive price action at the very least. And we don't have it now. We can debate where it worked and where it didn't, but we just don't have it yet. So got to keep moving in the interest of, I've no interest in this stock at this point in time. That may change, but right now, no interest. Sorry, moving on. Hey, would you like me to spend another 10 minutes telling you why I have no interest? I don't think so. Stephen saying, already got your ribbons, been using for the past few years. You're one of the early adopters then, Stephen, who's asking about ILU, which this is more of a textbook turnaround setup, and they're not all going to be textbook. We've seen that. But here's another great case study here in just how powerful Why are my ribbons so good? I don't know, ladies and gentlemen. Could it be because they are made up by Fibonacci numbers? Maybe, I don't know. I don't believe in Fibonacci. Of course, he's a brilliant mathematician, but I don't believe that his numbers have any impact on the market, apart from the fact that people use them and they can be self-fulfilling, and that's it. That's the extent of my use of Fibonacci. But I tried different combinations over many, many years, and I've just stuck on these ones. I've been on these ones for over 10 years because they just bloody work. On the way up, they support price. On the way down, you don't want to muck around with being beneath them for any great length of time. And then, look, they just hammer back down. They just hammer these things back down. And just as amazingly, it's not until you cross that threshold of getting back above them and then being supported by them that you have any chance of actually going up. So the Iluka was one I started putting into the uptrends list in ChartWatch all the way back there where that arrow was in August. And it might have even been on that candle or that candle or that candle as the first instance I put it in as a high conviction setup. So entering around $5 as a turnaround setup. Now $7.50, so 50% gain in a few months. I think I'm pretty happy with that. But what would I be doing now? I mean, I think that's what you want. You don't want to know what I did before. Right now, I'm happy to maintain my current risk position on this. M for maintain my risk position, because I see no reason not to. I see nothing so sinister in the candles. Yes, there's a supply side candle here. We've talked about a supply side candle that pops up. What does it mean? That's a supply side candle, upward pointing shadow. It speaks of sell the rally. The stock rallied on that day, got beaten back down. But how much did it get beaten back down? Not a whole lot. So it's about using, I guess, a weight of evidence approach to say that there's not enough evidence yet to support this final conclusion, which I must draw, is the demand side in control or is the supply side in control? And right now, I still think the demand side's in control until I'm shown otherwise, and therefore I must maintain my risk position. I see no reason to reduce risk at this stage. Would I add risk to Iluka? We've talked about places in the past where it was exactly the perfect turnaround setup. And that's why I put it in as a high conviction in ChartWatch. I don't know if you're using the ChartWatch scans. I hope you are, and I hope they're doing well for you. And yes, I think I'm pretty sure I'd put them in on this day, put it in on this day and this day and this day. Okay, as all, but in fact, I'm pretty sure I put it on that day as well, as all possible places that you might want to consider. Now, you might not do it on these days because there's something else that catches your attention that you think looks even stronger than Iluka from one of my lists, or from you read something somewhere else and you like to investigate that. Who's to say how you do it? That's up to you. But each of those, I'm just showing, each of those are opportunities where I see you can add risk. There's probably a few down there. Not adding risk right now because I can't see the candle that tells me to do it. Okay, but we can also see the candles that if they did appear, I would happily do it. So something that looks like any of those, and then I would. So can you permit me another acronym? Can I say that on the next demand side candle, please don't make me type that all out, but we know what a demand side candle is, right? It's a long white candle, closer near the high, or it's a long lower shadow. Look, on the next demand side candle, yes, I could happily add some risk on this one, okay? And we're just sticking with this idea of a third because why not, okay? But for you, it might be something completely different. So that's all I need to know about Iluka. I could go find out about management or operations or any of those things, but that'd be irrelevant to me. I just need to know if I'm adding risk, maintaining risk, or reducing risk. Let's go to Steve's second one, which is WA1, which is one that has sort of flirted with the list a few times. Look, I want to say, and you could go back and check, on that day there, it probably got put in, but you probably would have had to reduce risk on that day there, and maybe it got put in there. It's been wobbling around. It's been really tough. I did run it here, and I think I ran it there as well. I haven't run it over the last few days because it hasn't warranted it. We're in the same position where we are seeing, even potentially this is a sector-wide thing. Luca's sort of seeing the same candle at the same time. Maybe WA1, these let's call them, critical minerals basket. A little bit of a pullback, a little bit of profit taking, whatever you want to call it, but not enough to change my view on this one. So we can start to move through these a little bit more quickly, I think. Short-term trends up, long-term trends up. The price action is still rising peaks and rising troughs. We've still got a predominance of white candles, and therefore it just becomes really simple. I'm happy to manage my risk. Yes, there's some supply-side candles in there, but not enough for me to worry about it. Same thing again, if I was to see a demand-side candle, because everything else is in place, next demand-side candle, I'm a plus 1/3 on this one when it occurs. If and when it occurs. Now, what I didn't do this on the last one. I'm not going to go back, but we could also talk about, well, if I am in it, yes, I'm maintaining my risk, but where would I start to reduce my risk? I wouldn't like to see it trade down here. If it's trading down there, it is taking out the demand that was in place at that point of demand. There's also another little point of demand here. We can see here, and you can see in that candle, it's around this area that the demand decisively came in. So we can say that if this is a point of demand through here, what does it mean if the price closes beneath that point of demand? We've seen that there was buying, excess demand, strong buying in that zone. If the price was to close beneath it, for me, it means that that demand has been consumed. There's sufficient supply to wipe out that demand. And where did that demand go? Why aren't they still there? And they thought it was a great deal last time. Why don't they think it's a great deal this time? And these are just too many questions that I don't want to answer, because all I really need to answer is, do I want to hold a full risk position on this, or do I want to have less risk? And for me, if it gets beneath there, I just want to have less risk. Doesn't mean I get all out, but I certainly don't want to have a full risk position, because that capital I release from here should be going somewhere far more productive. Okay, I'm not in stocks for a long time. I'm in stocks for a good time, and that might be different from what other people are telling you, because I think they want you to be in stocks for a long time, because ultimately, the longer you're in it, the more likely it is it'll go up at some stage and prove the person that told you to buy it to be right. You never know. James Bay Minerals, look, we've got a few problems here. These are candles which I would associate with not wanting to have a full risk position. Look, obviously there's still plenty of good things going on here, this and this, but I just think, and again, today's a live candle, and I don't want to have to say this every time, but I really should. We don't know until that candle closes, but if that candle closes like that, with the combination of that sell into the strength, that follow through, we're still selling, and then today it's a little bit disappointing. So for me, again, this is the order of magnitude. I'm not going to stress out about it, because if it rockets back up tomorrow, happy days. I've still got 2/3 risk, no problems. But if it keeps going down, I'm going, geez, I'm glad I followed the signals. Those signals aren't going to work all the time. We could get a huge white candle tomorrow, and I'll go, oh, well, it didn't work out. At least I've still got 2/3. If it tanks, I'll go, well, at least I've got 1/3 out. I'm in such a far better mental state to deal with it. I won't be happy that I didn't get it all out. I'll be, I probably should have got more out. Oh, well, I should have known that those weren't great candles. But you know what? At least I got some out. I'm in a better mental state to make a good decision on the next decision. When people are all in, sometimes they don't get in because they can't pull the trigger. Oh my God, is this the perfect place to buy? You're kind of bound to perfection when you think about it. If you're all in and all out, you're trying to find that perfect entry. You're trying to find that perfect exit. And guess what, ladies and gentlemen, you ain't perfect. Okay, Peter's got if the index analysis of the Nasdaq or the XJ is indicating a reduction in risk investment, does that influence your investment in individual shares? Yeah, it does. I will have to limit risk. I might not be able to take risk on the next trade unless I reduce risk somewhere else. I'll be far more vigilant. So there might be a candle, Peter, that I'm going, oh, geez, should I, shouldn't I? And if I'm in a reduced risk state, so I'm trying to get to a low risk setting, I won't be able to say, oh, I'll just hang in there. I'll say, look, I've got to get some risk off the table. And I will target the weakest ones first. The ones that haven't been performing, the ones I've kind of been letting off, they've got to go. And I'll still keep the strongest ones, don't make no mistake. But I won't get to that next risk setting overnight. That's impossible. Within a week, within 10 days is my general aim, because I still want to give my best ones an opportunity. Okay. Let's go to Simon. Is that the same Simon as before? I did answer your question, Simon. Can you please give your opinion on ETPMAG? I think it's a different Simon, because that Simon said he can't make it today. ETPMAG, which is coming up shortly. ETP, if I type it in right, There we go. This is obviously the silver ETF, and I wonder if this is on my list because it's been in several times. And I'll make this list available to you very, very soon. It's all the history of ChartWatch and all the featured uptrends and downtrends calls. But I know this has been in many times recently. ChartWatch's scans has been going for over a year, so just because it's been in many times recently doesn't mean it takes out the record. One that is at number 6 on 6th most featured. Okay, so 40 times I've featured this. 40 times I've said, this is my highest conviction setup, everybody. And the first time I put it in was July 2004, which is a pretty good time to put it in, around about there, and then 40 times. That's not far off once a week. I've said, just banged on your door and said, hey, gold. And most recently featured on the 6th of October, which is that candle there, isn't it? I'm pretty sure I put it in this morning as well. Actually, that's the data, and there's a couple of weeks old, a couple of days old. That's why. But I'm pretty sure it went in there. I'm pretty sure. So it's actually 42 times now. But I digress, because we're talking about gold. But ETPMAG, it's the same chart, isn't it? So 100% MRP. Hopefully you're okay with me just typing that on the screen now, and typing something like next demand side candle plus 1/3, and hopefully you can see why. Do I need to mention all of this stuff again and again and again? The good thing about my model, ladies and gentlemen, is it's consistent, and basically you just end up doing what's up there, I think, the same stuff over and over again. So happy with that one for you. I can't remember who that was. So it was Simon, and happy to maintain the risk. And this won't matter anyway. It's an ETF. There's no point charting this. We need to chart silver. And I do that for you regularly in ChartWatch Markets as well. And you know my opinion on silver. MNRS, again, another ETF. So it's going to depend largely on the stocks and not the ETF, because you get odd moves because they're a little bit illiquid. So just because that day was a big black candle doesn't actually mean that there were black candles in all the stocks that trade in here. So yeah, this one, it does make these a bit tougher. It doesn't mean you can't use price action and candles and things like that, but I wouldn't place as much importance on that single candle. I would go mainly on trends here and position of the price with respect to the trend. So as long as this is staying above my short-term trend ribbon, I'm okay with it, which means that all I need to do here again is MRP. I won't put the thing about the candle. There's no point looking at candles on these ETFs. And it might disappoint you. You might say, Carl, please check the RSI or check the MACD. I don't know. I don't know if I'm disappointing you with this idea that, well, there's nothing to do, so just maintain risk position. Is that disappointing? I could look at 34 more indicators, and none of them would tell me any more about demand versus supply equals price. Is that fair to say? And that's why I don't look at it. Hey, don't get me wrong. Number one, I started out as a fundamental analyst. I've got half an alphabet after my name with undergraduate, postgraduate degrees. I started out as a fundamental analyst. I'm not anymore. And I started out with about 45 different indicators on my screen, so you couldn't even see the candles. I didn't even start with candles. You couldn't even see the price. And I confused the hell out of myself. And you can see how pared back my approach is now. Let's go to Jai. Jai's got SVL. Which is, hey, it's still looking pretty good to me. We've got, obviously, short-term uptrend, long-term uptrend. Price action is still good. The candles are okay. And I say okay because the last few aren't perfect, but they're not anything too sinister. In fact, if anything, we're still seeing those downward pointing shadows, aren't we? So indicating that we've still got that buy the dip activity. And whilst that's the case, I'm very, very happy with this. I see no reason to do anything but maintain risk position. And as I'm doing these webinars for you, I feel like, I should be saying, hey, this is the exact top, Jai, get out. Or Jai, it's going to be up 30% in the next week, get in. Those are silly things. I don't know where it's going to be in the next week. All I can say is what it's doing now and whether the market likes it. And it can only look like that if there's more demand than supply. So MRP, I'd be actually happy on this one because we actually do have real candles. If I do see another strong demand side candle, I'd happily add risk to this opportunity because everything else is in place. One thing we haven't talked about so far, which is I do think is important, is clicking to that weekly chart, not to make a trading decision, but simply to see if there are any points of supply out there that might create problems or might be explaining why the price is just starting to stagnate a little. And don't worry about how big those boxes are. Just worry that, there's just make them as big as you like. They really don't matter. We're just looking for levels, and they're not going to play a huge role in my analysis. Just simply to see where it's a points of reference. So what we're seeing here, Jai, is in fact that one wasn't that long ago, was it? It was only there. We're seeing why the price is starting to stagnate here, because we have to remember that on the way up here, people thought that silver mines was finally going to go up. That was probably coinciding with a nice rally in silver, and the people thinking this is it. This is the time. Finally, my silver mine stock is going to go up. Happy days. And then, and some people got in, of course, thinking, oh, this is it. This is the one. Silver's going up. I better buy silver mines because it's got silver in the title. And they get very disappointed, don't they? They were disappointed. They were shattered, in fact, devastated. And think about all the people who got in here, all the peeps that got in here, or another important one, or didn't sell here. Like they finally got this piece of junk finally. Now, I'm just figuratively speaking. I don't know anything about it, so I'm not saying bad things about it. I'm just saying this is how investors would have felt. Okay. Oh, this piece of junk finally went up. Oh, and I didn't get out. Okay. They're devastated. We've got to 22. Now it's half price. There are going to be some people in the market who are holding silver mines right now who still remember that. They remember it vividly, thinking that I didn't get out there. Not this little black duck. Next time it gets back up to 22 cents, I'm going to undo my mistake. I'm going to feel better about myself that I didn't make that mistake at all, and I'm going to sell some there. They might not sell all. They might only sell some, or they might get out all. I don't know. But what it'll add up to is increased supply. Supply that meets the excess demand that we know was in the system. And then you've got other people. You've got the peeps that got in there, right? The poor peeps that got in there, like, did they get out here? Did they use my model to get out? They went, no, I can't get out now. I'm making a loss. Like, why would I sell a stock at a loss? I'm just going to wait for it to go back up. In fact, when it gets to here, they're not worried about it going back up or making money, isn't it? When it gets to here, they're not worried about profits. What are they worried about? They just want one thing. Please, God, if you just let silver mines go back up to 22 cents where I got in, I promise I'll get out and I'll never trade silver mines again. Please, God, just let me break even. And it's such a silly way of thinking, because silver mines could go to $20, and yet all they want to do is make no profit. But they'll hold on belligerently to the death. I mean, the thing could go to zero, be delisted, and they'd hold on that whole time. So their downside is 100%, and their upside is to make zeros to break even. Now, I'm not laughing at you. I'm laughing with you, ladies and gentlemen. Okay, because that was me. That was me time and time again. And you do learn, hopefully you learn, some people never do, that, well, if you keep doing the same stupid thing, number one, you've got to stop doing that stupid thing. And number two, the opposite of that stupid thing might be the right thing to do. So maybe there's a short selling opportunity. That was the key for me, is that maybe I can, not obviously I have to get out of these things, because every time I held on belligerently all the way down, I lost too much money. So get out. But maybe I can short these things and make some money on the way down. Anyway, we digress. All those peeps, guess what? Their prayers have finally been answered. They're breaking even. And some of them will sell. This is why we find that those historical points of supply tend to, not always, but tend to act as future points of supply. And therefore, as traders, we want to know where they are. And that's why, I might flick out to the weekly chart and just say, okay, this makes sense now. Or heading into this, I might not say buy on that candle. I might not buy on that candle. I might not add risk on that candle, simply because I know, look, it's probably going to hit that level and just spend a couple of weeks there. So let me just see how it trades at that level. Let me see the candles that come out. And the candles that have come out are pretty good. We can see, yes, supply's increased, but it's not deal breaker supply just yet, is it? So when I see pullbacks at a level that I kind of expect, I'm more comfortable with them too. If I'm holding and we see that pullback, we go, okay, this is no big deal. This is just those peeps breaking even, having their prayers answered. And then watching, now this is the best bit, ladies and gentlemen, because as silver mines, they all take break even, and then what silver mines do? You can guarantee it starts to go up, doesn't it? It starts to go up, it starts to go up, it starts to go up. And all those people are going, oh, I knew I shouldn't have sold silver mines. Why did I sell it? Oh, I never get the good ones. I can't buy it now, it's gone up too much. I'm laughing with you, ladies and gentlemen, not at you, okay? Let's keep moving. MRP and NDSC plus 1/3. Going to put in your comments if I've just described you to a T. Just a little face palm emoji will suffice. Let's go to the bottom because I can see we're actually pretty close in time. I'm going to go to the last 5 now. And we're going to work our way up. Pax put in a smiley face there. Carl, I'm laughing at you, says Sonia. Yes, we are laughing together, aren't we? Let's go a different Simon asking for Droneshield. Lots of Simons here today. Okay, let's go zoom normal and reset our scale so we're looking at everything consistently. I still like this. Some people might be, you can't possibly be holding Droneshield here. Surely that's gone up too much. Well, look at what we did. This is why I like to do these things in this particular trading platform. Because when I write stuff, they stay. So what did we say last week? We didn't have our plus 1/3, did we? We've kind of added that in this week. Let's go plus 1/3. Because that's what we said last week, and then what the other reason why I like it is I can just go copy paste. There you go, copy paste, very simple. Still maintaining risk position, but Carl, surely, it was 450, it's now 650, mate. Great trade, time to get out. I don't know. What do the candles say? What does the trend say? So, look, obviously, that's not ideal. But today's coming back really well. That's not a deal, but the sellers don't tend to hang around. The demand side kicks back in pretty quickly. And if today closes with that candle, we've got the same thing. Okay, now if today doesn't close with that candle, if today closes with a big black candle, upward pointing shadow, I'm going to start to think differently. 2 black candles together in a row, is that enough to manage risk? Probably not, but it's getting pretty close. I'd have to see it. So don't make me do hypotheticals. I'd have to see it. I can only call what I can see on screen, which is if that candle closes there, I'm still plus MRP. I'm still actually plus 1/3. Actually, don't mind adding risk here. Carl, surely you can't buy it now. It's gone up too much. Yeah, but you would have said that at any of these arrows. It's gone up too much. Carl, it's gone up too much. Carl, it's gone up too much. It's gone up too much. It's gone up too much. I can't buy it now. You've missed it. I've missed it, Carl. Carl, if I buy it now, it's going to crash. See, I told you so. So, told you so. Oh, damn. Why didn't I buy it on that pullback? I don't ask these questions. I just ask demand, supply, price. That's all I need to know. Okay, we've got 4 more to go. Let's go to Stephen. I don't know if it's the same Stephen. 2 only. I'm going to trust that this is a different Stephen. I've got to look at last names now. KLS. Which is Kelsian, which still looks good. Today's not the ideal candle, but it's, again, still trading. Let's go zoom, normal, and back to the default. There we go. But happy with this one. A classic turnaround setup. I'm pretty sure I started featuring it. Oh, in fact, you can go check. I'm pretty much sure it's that day or that day down there. I definitely put it on that day. You can just say, I just know days I put it in, right? Was this a reason to reduce risk? They're all pretty tiny candles. They're insubstantial. They're nothing candles, and it didn't get below the trend. I'm happy to hold this. Happy here, and happy here. So this is so easy. I love easy ones. MRP plus 1/3 R on the next demand side candle, isn't it? Next demand side candle, and that'll sit there so we can come back and check our progress next week. Let's do how many stocks do I hold at a given time? Says Michael. The answer is as many as I possibly can. So when there's more opportunity like there is now, I might even cut back to 1/3. I might even go to a 1/6. I don't want to give you specifics because it's not about me, it's about you. The message is keeping position or your additions, right, on each position, or your additions of risk. That's the best way to put your additions of risk as small as possible when there's more opportunity, so that you can hold as wide a universe of opportunity as possible. Okay, I know they're not specifics, but I don't want to get specific for individuals because that's not what this is about. As many of the universe of opportunity as possible. There's not just longs, okay, that's shorts as well. Okay, so we need to balance out our risk. And where can you find a really professionally, expertly curated list of potential longs and potential shorts done by an experienced technical analyst. I don't know. I don't know. Where can you find lists like that published every day for free? I wonder. I think we've got 3 more to go. Let's go to James. James has got how do I get them moving? Oh, I'm not going to go there, James. I'll put some information on how you can do that very shortly. John's got since West African Resources was suspended on the ASX, should I continue to wait until it starts trading again? Well, if suspended, I don't think you can do anything. Is that correct, John? I'm not sure if you can trade. So I don't know. I don't have enough information on that particular instance. And again, this is about technical analysis. I'm not sure if that's even a technical analysis question. Let's go to MEK, which has been in the list. I want to say it's been in the list. Well, somebody will be able to tell me, isn't it? Because I think it's been in the list since literally that day there, to be honest, at 4 cents. Do I have MEK in here? I'll have to come back and have a look. I can't see it in there. But anyway, it's been in there many, many times. Should it be taken off the list? These last few candles are far from ideal, but are they enough to tell me that the supply side has taken enough control to warrant managing risk? I don't think they are. I know today's candle is starting to get a bit scary, but I think I'm still a hang in there. So I'm going to get MRP, but it's getting close. It's getting close to me wanting to maybe just take a little bit off the table and go do something else more interesting with that money. Where is that point? Well, I don't like it when things close beneath my short-term uptrend ribbon. You'll see me write all the time in ChartWatch. The short-term uptrend is nullified if the price closes beneath the short-term uptrend ribbon. Okay, that's a big no-no for me. So let's say beneath there, I'd be looking to manage at least some risk. I think I've got 2 more to go. We've got GDX. We'll call it, I kind of covered GDX. I won't count this as one of the 2 to go because I have covered it along with gold. And if gold's going up, then why wouldn't you continue to own the GDX, or why would I have a different opinion on one compared to the other? Maybe you asked that question, obviously, before we did that analysis. Sue saying, hi, Carl, didn't quite catch what you initially said about not being able to send. I'm not going to talk about those just yet. We'll talk about that a little later on. Sue, hold on. We will sort that issue out. People asking, how do I get the trend ribbons? I'm happy to give the trend ribbons, but we just need to create a process within Market Index to handle the deluge of requests that we had for them. Okay, I can provide them in TradingView and give you indefinite access. Happy to do that because I just want to share them with you. But we will sort out how that will occur. Don't hassle us until we work that out. I promise I'll have an announcement for you in the next ChartWatch Live webinar on Wednesday. I promise. Okay. Let's go to, I think we've still got 2 left on that basis. We're going to do IGO, and then we're going to do Heather's asking for gold, but obviously the one you're asking for is the same as the other gold. They're all the same. And then we're going to do VMM. Actually, I want to do FXG because that one's so much more interesting for James. So last 2, IGO and then FXG, we're done for the day because I'm way over time. Turnaround setup, yes, I agree. It is shaping as a turnaround setup, but we've moving to another concept now, which is, well, there's a turnaround setup, but what is the quality of that setup? And how do I compare the quality of this setup versus some of the other ones? Certainly, I won't go back, but if you look at, go back to that Iluka example we talked about before, I think that was probably I think that was a higher quality setup than this one. This one is just, it's got itself back above here, but it's a very flat trend, isn't it? There's not a lot of impetus there. There's a lot of that motive or decisiveness going on. It kind of looked okay, like that was the first move up, and then it pulled back, but it pulled back a long way in, and then it had this crazy move. Lithium was going bananas, and then it never really did anything. And unlike Pilbara, which I did put in ChartWatch scans, Mineral Resources went in. Even Liontown got in there briefly, but then it popped out with that pullback. Some of them did get in, but this one didn't. You would have known that IGO was conspicuous by its absence because the trends never developed enough to the point where I became interested in them. Let me just remove those and let's just stare at that for a little while and just let it sink in as to whether the market is decisive about this. There's a strong and growing consensus that IGO is the place to have money in this space. Or there are, we've seen some of the other charts, even Pilbara is a great example of where maybe they're gravitating towards. So it's not that this is a bad opportunity. It's just not as good as some of the other ones, and therefore by default it must be overlooked. Is that not fair to say? If it's not the best, why are we looking at it? So yes, it's a turnaround setup. This might help you if you're in it. It might make you feel more comfortable to say, well, I'm happy to maintain my risk position on the basis that it is a turnaround setup, so it's not a short anymore, because this was one of the most shorted ones in the list for a long time. IGO, yes, 44 times. 44 times it went in again from when ChartWatch started back in here in June. 44 times. So good news is it's not on that list anymore, if that makes you feel better about it. And we're going to our last one today, which is FXG, which I want to say I put in here on this day at 20 cents. 60 cents, not a bad run. I do think if today's candle closes the way it is, I think we're managing some risk on this. I think that's pretty clear to me. Some of them I wasn't sure about. Maybe I need to see another candle. I'm going to say if it closes like that, this is the way I would do things. You are entitled to do things any way you want, of course. But I think I'm just going to take a precautionary measure here, knock a third off the table, lock in some profits, feel better about this, and then the next stage would be certainly that's a point of no return for me. I don't like to see it trade beneath the short-term uptrend ribbon, but I might get some other price action or candles to give me other exits, right, in between. So you might say, okay, well, I want to sell more than that. Hey, you can do whatever you want to do. I'm just telling you these sections what I would do. Knocking some risk off the table, still got 2/3. It's still a great trend. There's still over opportunity that this thing is trading at $1 in 3 weeks' time. And I want to have some skin on the table if it does that. But there's enough supply coming in the system now with that supply side candle forming that first peak, and then that one confirming it, and this one confirming again, and the close beneath that point of demand. There's no subjectivity here. This is objective now. I have to manage my risk. I can't go forward with a full risk position on FXG. Okay, if I saw other things, I might do some more risk there, and then we know how I feel about things closing beneath the short-term trend ribbon. Okay, so last week I talked about James Bond going into the Monte Carlo casino. What's the first thing he looks for? Is it the martini, the curvy brunette, or is nemesis playing baccarat? It's not. It's none of those. It's the exit. We need to have a plan for our exits. Okay, let us, and apologies as I always do at this stage. I'm always apologetic. In fact, we're not going to go there. We're going to go to here and apologise for not answering more questions today. I think I answered more than last week though, and I invite you back next week. That's the thing. We're back next week. Bring your questions again, and I will do my best to get to them. But even if I didn't get to them, hopefully it was worth your while. Hopefully you learned something in the meantime. If you happen to be watching this on the recording, make sure you hit the like button. That's always good for us to know. And hit subscribe so that you'll get notified each time I produce new technical analysis content. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. I hope you had fun. I hope you learned lots. I certainly had fun. All the best for your trading and investing until we catch up again. Bye-bye for now.